Nonsense. Nonsense. You got to drive the train. You need to be an active participant to your own rescue. You have got to be your own best advocate, which is number one, get us involved because we're going to bring the hammer. But if you think you're just going to sit by and take whatever they give you, sucker. Sucker. So here I am, I'm back, and I'm scared. I'm scared of this video. I will try to be as quickly as I can. I know some people don't like the long form videos. What do you want me to say? I don't make videos all that often anymore because of my schedule and everything we get going on. You know, we homeschool. I don't put my kid in those propaganda centers, and so that facilitates us being able to travel more and do things, and that's the way we roll. So I'm scared, but let's get into it. I put some things together, and that's part of the hard part is when I know I got to put a video together. I have all this information that Dan, Don, and Charlie put on my inbox, and they got a separate little section for suggestions for video content based on what they're seeing and communicating with so many of you. And there's just so much of it that I get scared. So I go through and I try to extract some of the things that are like key topics I know that have commonality to many people. So all right, let's get into this. The first thing I want to do is I put some notes together. I want to talk about some core fundamentals because I'm seeing this right now. We're working on 3 acquisitions, and between that and just some other things I'm seeing and working with a lot of you one-on-one, you got to control costs, and I know that's easier said than done. But the problem is, especially when I'm looking at some of these P&Ls and everything, is that, you know, the way you live your life is not the way you operate your business. For those of you who've worked with me in the past, working with me now, you know that I'm a tightwad. When it comes to business, it doesn't mean I'm cheap. But I have very tight cost controls, and as many of you have heard me say when I'm working with you, we don't spend that money until we're ready to pay the toll and cross the bridge. You know, we don't want to expend that ammo. Now, look how I live my life. I mean, we travel everywhere. I mean, just since summer, I've been to Florida like 4 times. We've been out west. I mean, we've done so many different things. But that's how I'm able to do that. You know, because back in the day, we had good, tight cost controls, made great money, parlayed that, pushed it through the system, built our honeypot. That's how we're able to do what we do. But when I'm speaking with some of you, especially some of you newbies, you think like the way you want to live your life is the way you're going to operate your business, and you can't do that. Every dollar has to be controlled. That doesn't mean you're cheap. It doesn't mean that we're so cheap, we're foolish, we don't make good calculated decisions or sound investments. No, not at all. I'll give you some examples. And some of you have heard me talk about, some of you have the strategy or philosophy that if something is not working properly, just pound harder. You know, the square peg, it's not going into the round hole, let's just pound harder. That's not the way we want to operate our business or make decisions. We always make our decisions on the margin. So I'm specifically talking about like vehicle acquisitions. Are there vehicles out there that we could pound that square peg into the round hole or just pound harder and make it work? Yeah, but does that mean it's ideal? No. And so if we end up finding a vehicle that, because out of expedience, maybe it's close in proximity, you know, maybe it's in our strike zone cost-wise, but we're going to have to do some retrofit. So now that's going to push us outside of our strike zone. You got to keep these things in mind. So some of you want to take on, I'll call them projects, with some of these vehicles. No. There's the market. Look, is the industry growing? Yes, we all know that. That's why we're attracted to it, the growth potential and where this is headed. The market is flooded with vehicles. I shouldn't say flooded. I mean, you know, we have to look hard because we want to find good deals. Ton of vehicles out there, but we have to find good deals. Why? Cost controls. Cost controls. We have to have a budget. That's why we have a strike zone. We have specific parameters. When we're looking to scale the fleet, there's specific parameters we're looking for the vehicles. And again, I know some of you are, I'm always amazed at some of you when you said, I shouldn't say you personally, but many people when they email us, so many people echo, well, this is what my competitors are doing. Well, then go seek help and guidance from your competitors. For goodness sake, if you're trying to duplicate what they're doing, then just go do it. We need to be able to do more with less, bottom line. We can't afford to have vehicles sitting there, which is another key component that I'm seeing with some of these acquisitions that we're involved in. If you're not controlling cost, if you have excess capacity, i.e. you have vehicles sitting, that's costing you money. We can't do that. So let me real quick touch upon the vehicles. We don't want to pound the square peg into the round hole. If the vehicle is not ideal, if it's not within our strike zone, don't spend the money. There will be another deal. Maybe we need to wait a little bit longer, but so be it. Because it's not just the money. You're taking on a project, and let me tell you something. Everything costs more than you want to spend, and it takes longer than you plan for. So if you think it's going to be like a weekend project, or your mechanic's going to be able to resolve this, there's always something. There's always something. It's going to take a little more time. It costs a little bit more money. So if you think you're going to find a less than ideal vehicle, and you're going to pound that square peg into the round hole, don't do it. That's not what we want to do. Another key thing regarding cost controls, your overall expenditures, you have to think strategically. And I'm going to give you probably the worst example I've had. I was working at one point in time with a provider out in Ohio. She was the first person to tell me that she would tell me, like, look, Joel, I'm just going to tell you right now, I do stupid SHIT. And this is so painful. She was literally renting a space for over $10,000 a month, and then when you figured in at the quarterly, when the landlord figured in all the commercial maintenance fees, it would push that well above 10 grand. I think it was 10 or 10.5 a month. You cannot operate like that. Let's look at that dynamic alone, just in Ohio. Ohio is one of those states where they don't allow NEMT providers to do stretcher transports, which is always sad in my book because great money is to be made in stretchers. And I'm going to show you an email that underscores my point of why stretchers, if you're in a state where you do stretchers, you have to do stretchers, pure money makers, and it separates you from all the slappy pappies. And you do not do stretchers in minivans. You do not do stretchers in minivans. I don't care what if they put antlers and a locking mechanism in there, you do not do it. I don't care what anyone says. I don't care if all your competitors, they're all using minivans. Minivans are not built for, if there's an accident, they just fold up like a tin can. They don't have the wear and tear, the durability, the safety, the space to accommodate people with power chairs, bariatric. There's a place for minivans in this industry, but do not do stretchers in them. But going back to this provider in Ohio you can only do ambulatory and wheelchair, so you're limited in terms of you can't partake or exploit or leverage all three sources of revenue, with the greatest one being stretchers. So already you could argue she's at somewhat of a disadvantage. So to take on such financial burden and obligation is insane. And the reason she was paying so much is, in addition to having an aged fleet, she could keep them indoors. And so her argument to me was, well, it's covered, it was a ginormous covered building. And I told her, I said, you got to break this lease and get off from underneath it. And she told me, well, no, you don't understand how the winters are, which was like, dude, I'm from New York. I'm from Communist People's Republic in New York. I get it. The weather, the cold, the salt. Don't care. Don't care. If I had some high-priced sports car, got it. You got an argument. But for a vehicle that we're just literally grounding and pounding to make money, come on, man. That doesn't fly. But when I kept time and time and time again, I said, listen, you've got to get out from underneath this. It's killing you systematically. It doesn't matter what numbers I presented, she wouldn't do it. And the argument was, I don't want to ruin my credit. And I said, listen, what is more important, credit or cash flow? Cash flow is king. As long as we have cash flow, we could do anything. So your business is going to die on the vine here, and you'll have no cash flow at that point in time. If we protect the cash flow, circle the wagons, protect the cash flow, we can rebuild, relaunch, move in a different, more profitable direction. But cash flow is lifeblood. We could do things. Do you think rich people care about credit? I mean, I could not even tell you the last time I couldn't tell you what my credit score is. I haven't seen it, touched it, nor do I care. It means nothing. You get to, it doesn't. As long as you have cash flow. As long as you have cash flow, you could do so many different things. So again, it's when I talk about saving money and using good, sound fundamentals with your spending, it's not just regarding the assets you might purchase. It's even something like your office space. You have got to restrict your spending. And again, I mention this because, like, you've probably heard me talk about in previous videos and newsletters, what is the fastest way to scale your business? Acquisitions. And again, right now we're in the middle of 3 acquisitions that we're working on different agreements. 2 of the 3, honestly, they're doable. One of them traditionally I would not touch, but because we have a specific buyer that's in very close proximity, it's like the ideal play. It's an ideal play that as long as we thread this needle, it's going to work. The second one, the numbers are there. The margins aren't quite in the strike zone where I want them to be. And I would attribute that, a lot of it, to poor spending habits, overpayment on certain things. Contracts are kind of on the border, they're on the hump. And then the third business we're working on right now is just an underhand pitch for our buyer, because the metrics are there. We categorize specific categories for different contracts because they're not all the same. They all have different weighted value. You're looking at trip volume, ROI, overall reimbursements, and everything. So not all contracts are the same. That's why there's different categories that we use to weight them. And it all goes into the formula, if you will, when we're determining the valuation of a business. So with that being said, one of the businesses is like, boom, been working for a long time. Now we're having the wedding ceremony. We're marrying them up to a buyer who's going to be paying cash, and it's just an easy pickup for our buyer because the business fundamentals are great. Good cost controls, good ROI, the SDE is beautiful. It's a win for everybody. And when you get the money thing right, you have good contracts and agreements. The contracts and agreements gives you the greater ROI, which gives you the more opportunity to do different things. But so much of it comes back down to cost controls. So let me segue cost controls into one of the first emails I'll share with you. Now this came from a while back, but again, it just echoes so much. I shared this in a newsletter, a while back here, but I saved this specifically knowing that for my next video, I need to mention this because now here I am being hit up by this representative from a particular broker who says, "Hi Joel, I've been following your work with MillionDollarTransportation.com and UMTBG, and I truly admire the way you stand up for transportation providers. Flattery will get you everywhere, but you're such a suck up. I know you've expressed concern about brokers, but I believe there's room for collaboration. Brokers can bring stability through steady trip volume and help providers by managing payer relations and compliance headaches that often cut into their time and margins. Done the right way, a broker partnership can complement direct pay strategies, not replace them, so providers can gain both independence and predictability." there are very few scenarios where I've seen providers thrive and gain independence when working at scale with brokers. I'd love to connect and share a few ideas on how we might align efforts to better serve the very providers we both care about. Dude. I know I often lump all, and it's not fair. I often lump all brokers together into one big broker box. And technically it's not fair because there are a few outliers that we can work with, maneuver with. I'll just leave it at that. There's a few, but not many. So, I mean, hey, appreciate the sentiments and all that stuff, but more on brokers as we move forward. All right, now this I shared in the newsletter a while ago, and the reason why I'm sharing this now, I actually dug this up because I remembered this email. Here's a provider. Think about this. He said, I woke up thinking, how can I trust a finance advisor who doesn't actually have any credentials? Look, I'm not a financial advisor, but I know how to make money. At one place I love to make money, the markets. How do you think that I'm able to have the lifestyle I have? I sold my business back in what, 08? I mean, that's how many minutes ago? Long time ago. How do you think I've made all this money? I parlayed my honeypot back then. I parlayed the business money into what we have now, which is allows us to do what we do. So he says, so I'm leaving your advice. Out of respect to you, I'm signing up for the whitewalkerfinancial.com, and they'll assign me a personal and credentialed advisor. So he's making a joke because, hey, we started last year with him with very little, and you know, this was in October. His year to date, he was up $53,000+, which, you know, I mean, it's free money, and you know, more than covers the cost for having me on his team, on his board of advisors. And you know, this is a great provider where it's like, you know, I'm on his board of advisors and I serve as the CFO, you could argue. But I share this now because what do we know right now? The markets, as we speak, right here now, as they're making this video, there's blood in the streets. That's when we make the money. We don't chase it. Look, everyone's heard the saying, buy low, sell high. You don't chase the highs. No, you buy when it's low. When there's blood in the streets, that's when you dominate. That's when you eat. That's when savage. This is when you buy everything. This is how you have that financial shift. This is how you stack your honeypots. These last couple of days or weeks has been nothing but blood in the streets, which is exactly what we want. That's when we get rich. We don't get rich chasing the high and buying at the high. Doesn't work like that. And trust me, I'm not going to go too far into this. I love everything from day trading to swing trading, but then the buy and holds. There's just some phenomenal buys. And, you know, again, the reason I included this right now is because guess what? He mentioned this last month when things were popping. Since then, we've bought so much over these last couple days and weeks. We've bought so much. I'm on the road and we're still buying stuff. Now, when the markets pop again, which will be soon, guess what? I mean, his 200,000, 26, boom, that's going to be through the roof. So let's keep moving. In an effort to expedite. Let's see what we got here. Hi Joel, thanks for your quick reply regarding your question about whether I'd want to go with an additional mileage charge. Okay, so I was working on a service agreement for this guy. Regarding your question about whether I'd want to go with an additional mileage charge or an out-of-service fee, I'd appreciate your recommendation. As I shared, we want to keep the proposal appealing since we plan to expand in the area, but we also need to charge slightly more than usual in the meantime. Given this, what approach would you recommend we take? I love the thought process and strategic planning and the willingness to listen. That's key. That's clutch. Willingness to listen. The executive director at blank facility has been very upfront with me. He explained that corporate, here we go, Corporate. They have a corporate. And somehow you're just a little slappy transportation provider because that's the way they all want to treat you. Corporate. So you shut up, you stay in your corner, you stay in your box, you do as you're told because we got corporate. You are your own corporate. More on that later. He explained that corporate typically wants to hold contracts at net 90 to 120 term. Are you insane? Are you insane? Net 90 is essentially 180 days, which means you would provide service for 3 months, then send them an invoice and give them another 90 days. It's 180 days. You're sitting there waiting. 120. I mean, what are we getting to half a year here? That's disgusting. But he also understands that it isn't always sustainable for us. Thank you. He's willing to broker on our behalf. Whoa. The administrator who needs us is willing to broker on our behalf to serve as the intercessor, the intermediary between corporate, and what we're trying to accomplish as a transportation provider. It's the way that it just, it never ceases to amaze me. I'm marveled at how people think like they could just browbeat the transportation providers, the home care agencies. It's just incredible, the things that we see. He's willing to broker on our behalf, and I told him I'd be open to net 30, but nothing beyond that. Given this context, which option would you suggest is the better way to structure this so it's attractive to the facility but still protects our interest? Also, just to keep you updated regarding the vehicle that was totaled, we're still awaiting word from the appraiser. I don't know what's happening right now, but we're like in the twilight zone. We are literally working, and we've always done it, but it's like we have I think it's 6 or 7 right now, different providers we're working with where we are having to get involved and battle the insurance companies, because the insurance companies, when vehicles get in an accident through no fault of your own, and they want to, their fair market value is based on, wait for it, a cargo van. Well, guess what? We have 88 compliant vehicles. They're not cargo vans. So what happens is the insurance companies try to lowball you, screw you out of the money, and depending on the situation, which we have, one of them, we're kicking butt. We're about to win this thing, where not only did we get, I think I shared it in one of the newsletters or videos before, one of them, we're still battling it, but we're so close. Not only did we get paid beyond our fair market value, now we're getting a loss of use, which is going to be almost 6 figures. Phenomenal score. So, but I don't know what's happening right now because we're literally running like 6 or 7 of these little battles. We're fighting everyone from Progressive to Sedgwick to whoever else. And every once in a while, too, we got to do the same nonsense with the workers' comp. He mentioned they're still in the process of evaluating the value of the wheelchair accessible components and features, which is what's causing the delay. Nonsense. It seems most insurance company banks aren't too familiar with this type of vehicle, so it's taking longer than anticipated. Nonsense. You got to drive the train. You need to be an active participant to your own rescue. You have got to be your own best advocate, which is number one, get us involved because we're going to bring the hammer. But if you think you're just going to sit by and take whatever they give you, sucker. I'll be sure to keep you posted once I hear back on the payment. Now, this is a provider where, again, keeps us on retainer for the last million years. Now, I've taken over that project completely because we serve as the CFO, so we get in there and we battle that thing out. All right, let's bada bing, bada boom, get a little more love from some brokers real quick. This was, a couple of you shared this with me, which was awesome, but this is a quick little blurb from, what was it, the care car. It's like, hello, blank. Nations Transportation, because now, again, what happened with everything from like logistic crap? Why did they have to change the name to motive crap? The brand sucks. What do you do when your brand sucks? Rebrand. Same thing here. Care Car is god awful. So now they are Nations Transportation, formerly Care Car. I share it with you because, dude, these dudes, I'm not even going to waste your time reading through all this nonsense. Because Care Car, now Nations Transportation. Dude, so talk about some of the lowest payers, some of the best slappies that are out there. Unbelievable. Here's a second part of it. And here's another thing. So I'm sharing this with you. If you kind of scroll down, here's the minimums they need you to have. But also, I always love the expectations. It's like, corporate! These brokers give you slim margins. More on that in a minute. They give you slim margins, and here they are dictating that the metrics you got to have. 90% ride acceptance. Well, what if you... More on this in a minute, but you have to accept 9 out of 10 of their suggested trips. 95% real-time status updates, less than 0.3% customer complaint rate. I mean, and they give you such low margins, it's like you can't even deploy a legit staff. It's just such... Oh, man. But again, this is why they have to rebrand, because their brand sucks. Let's see what this one says. Hi, Joel. After waiting over 2 weeks for an offer for the damaged van, this is one of the ones we were talking about. This is what they came back with. It appears they're trying to base the payout on the value of the standard cargo van, like I said, rather than the ADA compliant wheelchair accessible van. I find that concerning, especially since during our last conversation, there's the problem. Conversations. Unless it's done through email, unless it's done through us hammering them home, they're gonna browbeat you. It's just fact. It's just fact. They try to do the good old boy thing. Pick up the phone call. I mean, dude, I got a provider that couldn't be any further away from New York than he is. And yesterday, the insurance company, knowing that they're up against it now, because now we've submitted stuff to the state to complain. And so now they're calling the office asking for Joel Davis. I love it. It's phenomenal. Because we got him by the cojones, man. It's beautiful. I find that concerning, especially since during our last conversation they mentioned they were assessing the equipment. It's like a broker. You never believe what they say, ever. What is it? What you do speaks so loudly I can't even hear what you say. It feels like they know exactly what they're doing, but are avoiding properly factoring in the cost of the conversion and accessibility modifications. Exactly. They do know exactly what they're doing. It's like brokers. They care about their bottom line, not yours. And the more they could squeeze your bottom line, the more they what? Inflate their bottom line. Could you please review this and advise on the best way to push back? Boom. Nailing them. Nailing them. Got them. Let's see what other delicious. Okay, a couple more here. Okay, so again, here's our big box of all the brokers. Now, this is from one guy. Just got off the phone with American Logistics rep. Dude, Care Car, what now? Nations Transportation and American Logistics, dude. These dudes are the bottom of the barrel of the brokers, man. Bottom of the barrel. He starts conversation off. Let me show you how to use the driver app, to which I replied, is that required? He seemed a bit surprised. I then further explained that it would be a logistical nightmare for us to try and differentiate the blank trips with 25,000 other trips we do per year, and that we couldn't realistically do that. I've mentioned in previous videos or newsletters, I think the record is 6, maybe it was 5. Either way, it's excessive. When a provider hired us to work with them, they were doing either 5 or 6. They had 5 or 6 different brokers they worked with. Oh, man. So they had all these different apps. Now think about this, how clunky this is. Not only did they have all these apps, because all they're doing is chasing the low-hanging fruit. So they're chasing low-hanging fruit, so they think, okay, let's just increase the volume. Now, mind you, I've said perpetually for decades, if I'm drowning in 10 feet of water, I'm good. Trust me, I don't need 5 more feet of water. So whether it's 10 feet of water I'm drowning in, 15, I don't need any more. I'm good. So if you're not making a lot of money with a particular broker and you think if I just keep adding more and more brokers, it's going to somehow work out in your favor, it's never going to work out. You can't multiply something that's not profitable. Okay, so if you're not profitable with 1, 2 brokers, you're not going to be profitable with 3, 4, 5 brokers. So this client provider, and I've seen others too, but I think the one that I'm referring to takes the cake with 5 or 6. The dispatcher would also have to text some of the drivers to tell them, check out this app at this particular time. All right, hey, we just dropped a trip in this app. Go check out this app. It's just the most insane. It's insanity. You cannot operate like that, and you wonder why they can't scale. The margins aren't there. It's too clunky. High turnover. Drivers skip out. It's just a cluster show. So he continues, I further explain that we're happy to have our billing team upload the data that they ask for, but there's just no way for us to expect our entire team to try and accommodate the trips. Now, if there's legitimate need in our area and there is room to negotiate, then I'm happy to explore a win-win solution. He's currently talking to his manager. All right. It's just the audacity, the audaciousness a lot of times with them. Now this is from a different one, American Logistics, same type of thing. And he just sends a quick blurb. How do people make money? 28-mile wheelchair paying roughly $52. What is that? 28 miles and you're getting paid for. I mean, you would probably make more if you were paid straight mileage, like the IRS. I don't even know what that is off the top of my head, but it's got to be comparable. And then he cites another broker, a different one. He said, this broker, the name, paying same trip if it had the mileage would be at $102. So, I mean, you're looking at almost double. And that's one broker versus another broker, which is still marginal at best, but 28 miles. Think about it. It's like, I was in Florida here a week ago. And you look at something. I'm going through Orlando. You want to go 10 miles to a restaurant, but it's going to take you. You look at your GPS. It's going to take you 35 minutes to get there. So 28 miles isn't 28 minutes. I mean, it could be an hour, hour and a half, depending on what and where it is. And you're going to be paid $52. Trash. Ash. Trash. All right, this one I put in because I actually shared this one with a bunch of our one-on-one guys yesterday because it's such a great. I told them all, put a pin in it. Remember, this is a great talking point, so I'm sharing it with you. You won't get this type of stuff from White Walkers and all the slappy pappies and all the the battle of the dingbats. So. Hi Joel, I wanted to update you on the situation with the blank healthcare center and get your guidance before I respond to the CEO. He called me directly regarding ongoing issues with the current ambulance vendor canceling non-emergency stretcher trips due to 911 prioritization. He asked if we could take over all of their non-emergency stretcher transports. Winning! This is why, if you're in a state that allows NEMT providers to perform stretcher transports, you do it. He continues, I explained that we cannot bill Medicare and blank, the name of the popular insurance there, without ALS, BLS certification, but we can provide private pay stretcher service to the facility or patient as we do with several other facilities. He understood and asked for the information and pricing. When he asked for rates, I verbally provided our current updated stretcher rates of $225 loading and $7 per mile, and he was comfortable with that. So now, think about it. Here's the dynamic. The ambulance company has to prioritize 911. And look, you can't bust their chops about that. It makes common sense. You got an emergency, you got to go, right? So that can often lead this facility and hang in the bag. I mean, they got people that need to go out, but guess what? They can't do it because the ambulance vendor that they're using, they get a 911 call, they got to go. So now this healthcare center is saying to our client provider, hey, we're done with that nonsense. Let's just go right to you. But now the facility is going to pay. So typically what would happen with an ambulance transport is if the patient had Medicare, Medicaid, Medicare would pay typically up to 80% of a emergency transport. Then the other 20% would be either picked up by some type of insurance, private pay, whatever. That's why a lot of times ambulance companies, they get left, holding an empty bag because they'll only collect 80% on a trip sometimes if someone doesn't pay the other 20%. So this is a great price point where our transportation provider is going to make good money. You have a facility that wants to give them all the transports. They're going to make good money on it. But who's paying? The facility is going to pay for each one. But guess what? It's a win. It's not like they're paying $2,250 like they would for the ambulance crew. Rather, they're paying $225 plus $7 per mile, which is good money. He continues, let's see where I was. When he asked for the rates, I verbally provided our current updated stretcher rates of $225 loading and $7 per mile, and he was comfortable with that. However, after reviewing our old service agreement, I realized stretcher service was already included in the contract we signed with them. The contracted stretcher rate in the agreement was $195 at $4 a mile. So I went through and looked at that agreement. That agreement was from 2023. So we had plenty of room that we could modify. It exceeded the length of the original contract. Since the facility hadn't been using us for structured transportation, we were able to go in there and restructure this agreement. So I think that if you heard my phone go off, that means that I gotta start to bounce. Yes, I do. So duty calls, family calls, kiddies calls. Got a lot going on. That in a matter of months, I'll be able to drop some bombs and tell you about some of the projects that we've been working on that are going to be like, some of y'all are going to be like, dude, you are crazy, but that's what we do. So I'm going to take off. But listen, I know some of y'all get upset because I take so long between videos, but that's why when I make a video, I gotta put some good nuggets in there. Hopefully some of you have gathered some good nuggets out of my rambling here today. I'm trying to make the videos as long as I have in the past. Too many people, they want the shorter videos. Look, I'm not a content creator. It's influencer nonsense. That's just not my gig. But so I gotta try to condense everything to the best of my ability. So, all right, folks, I'm out of here. Stay tuned. Contact us. Hit us up. Dan, Don, Charlie, all the crew, all my DME crew, all that kind of stuff. Tom, Karen, everyone from TPG Media, doing well. So hit us up, folks. When you do, I'll see you at the top.